Welcome to On the Chain. This is Jeff. You are here live, and it is Labor Day weekend, so it's a pleasure to see everybody jumping on from all over the world. Chip is a bit under the weather tonight, so he isn't with us, but he is watching, he is tuning in, and it's a pleasure to see everybody bouncing in because tonight we are going to talk about the SEC lawsuit backfiring. What did Brad Garlinghouse say? That's what we need to get into. And the Rampage is hurting retail investors, not just in the crypto space, but in the stock market as well, because we see the SEC going on a complete rampage, even targeting Robinhood that does go directly after retail investors that are just trying to make themselves and put themselves in a better position. So we got to think about that. We got to dissect it. We got to dive in. But if you guys are ready, I'm ready. So I think we got to kick this thing off. So let's go.
Welcome to On the Chain.
All right. Welcome back. Good to see everybody. I want to give a quick shout out to John Doe Crypto because I look at this comment just as we're getting ready to roll. And I see that he says, I was thinking, damn, I hope there's a good video tonight because the markets are prime. They're ready to go. Came to the search and saw the video, then saw the pre-chat hype because everyone's getting fired up tonight on the chain community. Outstanding, really great commentary. Big shout out to Hands Loaded for all the support that you are giving us and keeping everybody on track and in check. So let's say who else is bouncing in here. We've got somebody brand new here too. We've got XRP Ninja, brand new comment. This is not representing the XRP hodlers, but is solely my opinion. But XRP is going to the effing moon. There you go. So give a quick shout out where you guys are tuning in from, because we got, you know what? We keep getting more and more people tuning in from Bali. So Gavin, what is up? Hello, bro, from Bali. Hello, bro, in Bali. And then we've got South Africa represented here. Give a quick shout out. We got California chiming in here. Legendary. What is going on, Legendary? So, hey, quick shout out to, where is it? There it is. Quick shout out to permission.io because tonight's show is brought to you by permission.io. So quick shout out to them. You guys know you've been online forever and you guys know how many ads there are that pop up in every browser. Those guys are monetizing billions and billions of dollars on your back because every time you're out there trying to browse, pop-ups everywhere. And man, they're making tons of money. But guess what? You make zero. You don't make anything. And it's your data. And they're following you around with cookies and tracking. Go on one website, it finds you on another website. And guess what? Permission.io created this browser extension, allows you to monetize your data every so often. They throw out a video, say, hey, you want to watch it? You say yes, and you get to earn cryptocurrency. You earn the ASK token, ASK token. It's awesome. You can check it out. It's in the description below as well, but permission.io. So, hey, this is amazing, right? So big shout out to Chip also. Hope, Chip, you're feeling better. You're getting better. And we're going to see you back on tomorrow night. But tonight we're going to dig in because there's a lot going on. And Brad Garlinghouse came out swinging with the SEC. So Brad Garlinghouse, he came out and said, you know what? This lawsuit from the SEC is backfiring. It's not working. It's not going as planned for the SEC. Why? Because the SEC keeps tripping all over themselves. Every time they come out with something, they trip and they stumble and they're always trying to finagle and they're trying to figure out a way around to put Ripple in a spot. And the crazy thing is that the SEC had come out and they singled out the XRP investors and they said XRP, the XRP community and XRP investors simply aren't smart enough. They don't have the technical know-how to understand what's going on. How crazy is that, right? So there's just a lot going on. And the Judge Knepper, looks at the SEC and is like, I keep asking for stuff. You're not delivering stuff. So what in the world's going on? But while this whole debate and argument's going on, the Twitter sphere and the YouTube channels are all talking about settlement. But what we're going to see here, in my opinion, Brad Garlinghouse, these guys with Ripple, they're protecting the crypto space. They're on the forefront. They're on the front lines. And they said, hey, you know what? We're taking all the fire so the rest of the crypto space can keep expanding and innovating in the United States. Why would there be a settlement at this point? What does Ripple have to gain from a settlement if it doesn't protect tomorrow? If it only accomplishes one small component, but doesn't provide the regulatory clarity in order for the space to continue to flourish, right? So let's check this out. Let's bring up this article and these comments from Brad Garlinghouse, because I think they're spot on, and it really, purveys a very important message. So here we have Ripple XRP boss, Ripple boss, agrees the securities lawsuit has backfired on the SEC. This article written for Crypto Slate by Samuel Wan. But check this out. Brad Garlinghouse blasts the SEC's handling of the Ripple case, implying the regulator is making it up as they go along. So I want to see some commentary from you guys on this. Is the SEC making it up as they go along? Are they tripping over themselves every single time we hear from them? So check this out. In reference to the unfolding SEC lawsuit, Ripple CEO Brad Garlinghouse doesn't hold back in framing the case as farcical. Specifically referred to the upholding of impossible fair notice standards and due process. Right? To read the rest of this article, click here. We're not signed in. We're not going to click there, but let's get into this part of it. So the fact that the SEC is just bungling the case, the fact that, and we've reviewed this so many times over and over and over again, but Brad Garlinghouse, their lawyer Alderati, and it's amazing, because we look at this thing and we look at the SEC and we look at some of the statements from their legal team. We look at some of the statements from Brad Garlinghouse, and their focus is how do they get to the next level? How do they protect not just XRP, because there's been some misleading statements from the SEC as it pertains to XRP, and misleading not just on the digital asset, but misleading towards the XRP community. But Ripple isn't there to protect just XRP. Ripple has to protect their own interests. They have to protect the solutions and the technology that they're developing to facilitate and help cross-border payments. So it's a major deal. It's a major hurdle. We already knew going into this whole thing that Ripple was taking on this Goliath Swift. We beat this, into the ground talking about this, but it keeps coming up. Why? Because the SEC is pursuing the case and continues to drop misleading information, which is confusing not just the judge in the case, because they're not delivering what the judge requests, but they're, like I said in the beginning, they're always trying to finagle and trying to find, some way forward. And it was Gary Gensler that went to Twitter and said that there's those in the space that go all the way to the gray area. They go all the way to the line, and then they back up off the line, and then they try to move forward. It's the SEC that's going to the line. Is he trying to single out, as we brought up before, Ripple? Is he trying to single out the XRP community and those that are investing in the crypto space, going to the line, going to the gray area? There's so much clarity in the space, but there isn't. We've seen, we've seen multiple commissioners, Hester Pierce from the SEC, come out and said there is no clarity. We saw a commissioner from the CFTC come out and say there is no clarity. But the SEC wants to continue their momentum, continue this direction. So I think that this is, it's so key. It's so critical, right? So Jeff, echo chat, okay screen. No clue what that means. I don't know what that means. But great. Is there an echo? Is there something going on? I don't know. Let's see here. Whitefly's in here. What is up, Whitefly? Whitefly 0000. What's up, Whitefly? Great to see you here. XRP my pants. The SEC is urinating on us and calling it rain. All right, so there's one way of putting it. Right here, you've got Helmuth Castandia. We've got the SEC will pay Ripple Labs court fees as well as compensate the class action participants led by attorney Deaton. There's so much going on. I mean, it's amazing what's happening. Big shout out from Vancouver. Appreciate you. Really appreciate everybody over there. Appreciate Vancouver. Reynos, appreciate that you like the show as well. And there's just crazy stuff going on. And we have a lot of great stuff to cover. So we're just going to fly through this because there's good news. There's the SEC news. You know, thank you, Hans Loaded. No echo. Sound check is good. Awesome. Sin City tuning in as well. Lionel says there's a slight echo. I don't know. Oh, you know what? Let me check something. Hopefully this didn't. Nope. I've got Crisp. Crisp is working solidly here. So hopefully not too much echo. All right, let's get into this one. Let's fly through some of this good news and give some commentary, ask some questions, throw up some topics, and we'll dig into all of it because Mark's over there in Japan. It's morning. He's got some coffee and he's ready to go. So, all right, let's check this out. Let's get rid of that. Echo, anyone feeling H-bar? H-bar taken off as well. Look at this. Texas, right? Cryptocurrencies gain legal status in Texas as new laws take effect. There's some new laws over in Texas. We do know that Texas wants to attract the business. We got brain drain happening in California and New York, and Texas and Florida are the big winners in the brain drain from both Texas and California. Now, Texas is taking it a step further, and they want to normalize and legalize the process, meaning providing some regulatory clarity as it pertains to cryptocurrency, making it easier to build in Texas. Everything's big in Texas. Why not cryptocurrency? So check this out. Texas becomes the latest U.S. state to adopt crypto and blockchain tech under its commercial law. So James Rule, XRP, big shout out to you over in Texas. Texas is the place to be, apparently. James Rule knows it. Check this out. Texas House Bills 1576 and 4474 passed in May by the state's Congress and in June by Governor Abbott. Huge. This is huge news because it takes effect when? Right now in September. So everything's taking effect. Check out these cool watches, especially this one right there, that Submariner. That's pretty sweet. I like that. But House Bill 1576 focuses on the creation of a working group that oversees the expansion of the blockchain industry in Texas. So you need the work group. You need to try to expand it. House Bill 4474 adds the definition of term virtual currency into the state's uniform commercial code, the set of laws that govern business transactions in Texas. How big is that? It's massive. So here we go. Here we go, Texas. Go big in Texas, because you're right, Miguel. New York sucks, and everybody knows that. And Texas is kicking ass all over the place. Texas #1. Wyoming is big over there too. We even see a bank over in Oklahoma that's going crypto friendly, which is huge. But check out section 9.102 Business and Commerce Code is amended by adding subsection 29-A to read as follows. Virtual currency means a digital representation of value that functions as a medium of exchange, unit of account, and store of value, and is often secured using blockchain tech. There you go. It covers everything. It covers XRP. It covers Ethereum. It covers Bitcoin. It covers all the digital assets in this space, secured using blockchain tech. It's huge. In a new interview by Cointelegraph, Lee Bratcher, the president of the Texas Blockchain Council says that Bitcoin 4474 allows institutional investors to get involved with sizable investments. So there you go. It's massive. It's big. It's making things happen. And James Rule XRP is right there on the forefront over there in Texas, building in the digital space, living the dream and buying and spending. Guess what? With XRP. So there you go. Now it's real. Now it's legit. As of September, Texas is taking it all the way. And James Rule is right there on the forefront with them. So that's exciting over there in Texas. John Doe Crypto, F in Texas, James Rule XRP. I drive by your region on my way to service Sonics down in the good old Golden Triangle. So there you go. Texas is massive. Texas is happening. And Helmuth says, can't stand ya, is saying that XRP is on the move today. Boom, boom. Big news across the board, right? Because we see Bitcoin blowing up. We see Ethereum blowing up. We see XDC blowing up. We see XRP is blowing up. They're all moving up. We see ADA moving up. It's crazy across the board. There's a lot of excitement. So, man, even if it's nighttime, make sure you guys get a couple shots of espresso or something, because there's a ton of stuff to go through. I realize I'm reading this article, looking over there, and I don't know if I shared it, didn't share it, but that's how it goes. So I'll tell you what else is cool, right? So we're looking at the development. We're looking at all these things happening. We're looking at some pushback and some resistance. We're going to look at the IMF, the World Bank, and the BIS in terms of how they're trying to take control. Sol, Norseman says Sol, S-O-L, to take control of the conversation on digital currency. And I'll tell you what, those in Europe right now, how many of you guys are in Europe? Throw up a thumbs up or something like that if you're in Europe. But there were some polls taken, some stats that those in Europe do not want a euro currency. They want sovereign control of their digital currency, and they also want the blockchain rolling out independent of the EU. So that's huge. So give a shout out if you guys are over there, and we're going to talk about that in a minute. But in the meantime, there's a lot of conversation over DeFi, right? And the question is whether or not DeFi is centralized, decentralized. Is there one entity that has significant influence over the DeFi? And how exactly does it break down? Because I'll tell you what, the SEC is also going after DeFi. And we're going to talk about that when we get to the segment of the SEC Rampage. The SEC going crazy in this space because they're not necessarily looking out for the individual investor's interest. They're looking out for someone's interest, but it's definitely not retail. And we're going to show that. It's very clear based on the rampage and the chaos and the turmoil that they're creating across the board. So we need to get into that. But check this out. If you guys know Andreessen Horowitz, right? Andreessen Horowitz has done a lot across the board. But he has a company called A16Z. Here it says A16Z answers critics with fresh disclosures on DeFi delegate program. Now, this is important because DeFi is a lot of what we talk about. Decentralized finance. How does that provide freedom? But we also see that the SEC is going after Uniswap. That's decentralized. So that's DeFi. Look at this, though. A16Z published more details about its token delegation program, revealing new beneficiaries like Kiva and Mercy Corps. You know, that's pretty big. The Silicon Valley heavyweight is calling for greater transparency about how influence is distributed by DeFi token holders. Now, I look at this and I say, okay, what exactly is going on? And who's influential here? As a big backer of the mobile-first DeFi platform Celo, for example, A16Z holds a cache of Celo tokens. Tokens provide both a financial exposure and the means to influence the development of a project through participation in governance voting. So the question is, does A16Z have a significant amount of influence across the board in these DeFi in this DeFi world? So look at this. In June, they launched a $2.2 billion crypto fund that's invested in DeFi, right? It's backed some of the sectors known decentralized protocols like Uniswap and Compound. So A16Z has invested heavily in both Uniswap and Compound through a $2.2 billion crypto fund. Now, what kind of influence do they then exert if they're heavily invested like that? So look at this. A16Z has previously disclosed that it has delegated tokens to student-run organizations, including Stanford Blockchain Club, Harvard Law Blockchain, and FinTech Initiative Blockchain at UCLA, and Blockchain at Berkeley. So they're pushing the narrative and the influence at the university level. They even have, look at this. So in July, we have the Uniswap Treasury and gave Harvard Law Blockchain $20 million. 20 million. I mean, that's massive, right? Just massive. But look at this. So here in a blog post published August 26, A16Z shared more detail about its token delegation process, including a list of best practice. Now, I look at this and I'm like, oh, how much influence do they really have? What exactly are they doing? So here we have the transparency proposal was also striking. A16Z stated that it will become increasingly important to give DeFi communities access to information about the relevant parties, the terms of underlying delegations, the relationship to the token holder, and more. So if you own a lot of that token, a lot of that asset, if you're heavily invested, then you also have a lot of votes delegated to you. And that means that you might have more influence in the space. Does that make it centralized, or does that just make one party more influential in the space? So that's definitely something that needs to be identified and understood a little bit more. But I think, here you have this group, they're heavily investing. They want it to develop. They want to see expansion. They don't want to see it ultimately centralized. They want to see more, right? So look at this. And I think this is key. This is key to a lot that's happening right now. But look at this. So you have, ultimately, we are strong proponents of delegation and believe it has an important role to play a protocol governance. So imagine the world being more decentralized. Imagine the voting systems being more decentralized and have a little component of this protocol governance, right? Let's say you want to make a change on the XRP ledger. You need to have a certain percentage of the validators vote in a certain direction in order to make some of those changes. Now, imagine in the voting space, if things like that would happen too. Imagine, voting one vote, one person on the blockchain. I think the influence would be amazing because our representatives then are getting, here it is. I've voted. It's proven that I voted on the blockchain. I don't get to vote again. If I die, I get removed from the voter poll instantaneously because the death records are connected with the voting records. So it happens in kind of the political sphere as it does in the economic sphere. You want to make changes. I think it's a good thing overall. If it's good for the economics, it's good for DeFi, it's good for politics. That's how I look at it. But this is like testing the waters. This is where the development is. And you know what? I get fired up. I get excited about it because this is the change that things are moving in. And here we are, we're living this. And things are moving at such a rapid pace right now. And we got to address it. So, XRP Panic says the ERC20 is garbage. But you know what? XRP Ledger is rolling out some smart contracts. They're allowing developing on the space, the side chains. We're seeing why am I blanking on stuff? But we've got multiple groups right now. If you look at with Flare, building on, and the smart contracts are relevant to the voting and the DeFi space. So all of this becomes very instrumental, but we're seeing multiple, protocols that are building outside of the ERC-20s. And I believe that once you start seeing all of these technologies kind of coalesce a little bit and people have a better understanding, you start maybe moving away from ERC-20s, but the competition goes up. Maybe the Ethereum 2.0 at some point in the future actually kicks in and makes it a little bit more resilient. Maybe the gas fees come down to nothing, and then things can actually start happening. But either way, I think, things are exciting in the space. So we've got Niche Natividad is saying XRP is now 1.32. So the space is growing, space is heating up, and it's getting even more exciting. So anyhow, anything you guys want to throw in here, anything you guys want to talk about, throw it into the chat. I'm trying to pull them out, and we'll talk about it. So, all right, here's something I like this. I like this comment because we're going to talk about this here in a minute. But it is interoperability is the key in terms of ERC choices when building out dApps. But interoperability is key, and we're going to see that interoperability across the board, right across the board, interoperability becomes critical. And I'll tell you exactly where it becomes critical is right now. And that's what we're going to get into. So I referenced in the beginning, the BIS, the Bank of International Settlements, the IMF, the International Monetary Fund, and the World Bank trying to gain influence over the world's next reserve currency, or should we say the interoperability function between digital currencies or those central bank digital currencies, right? So you see the BIS, the IMF, the World Bank, other central banks around the world are working overtime to test their own solutions for cross-border remittance, right? Now, if you think about if these guys have too much influence, think about the amount of power that it puts into the hands of central banks, the BIS, the IMF, and the World Bank outside of the sovereign power of a country. Now, imagine if all of these protocols, all of these central bank digital currencies, these silos, country to country, would utilize a third-party rail that's already been in place and being built out for the past 10 years, whether it's Ripple with RippleNet and ODL or R3 or something comparable. But think about how the governments and the central banks are now 10 years later. Think about an entire decade. That's how far behind most of the central banks, the BIS, the World Bank, the IMF, 10 years behind where RippleNet is. RippleNet has built out the infrastructure. They built the rails. They're primed and ready, utilizing the XRP ledger for cross-border remittance payments, for moving money all over the world. And now all of a sudden, the BIS is like, we created something called the BIS Innovation Hub. And we're going to allow countries to test out their CBDCs and see how they can be interoperable with one another. So that's the BIS. That is the IMF. That is the world. Do you guys trust the Bank of International Settlements, the IMF, and the World Bank? I mean, these guys they're not just third parties, but they're NGOs. They're non-government organizations that have impact and influence. Now, how much influence you want to give them? Do you want them then to control and dominate and dictate all the rails around the world? Of course not, right? So now is when we're going to open this article in a minute, because there's 4 countries that they're testing the CBDCs with, but this becomes very, very relevant. Because one of the things that people have said out there around the world as they single out SWIFT and the evils of SWIFT, let's say, forget about the inefficiencies, but people say, oh, well, the US government has too much influence over SWIFT. Well, as the world bodies coalesce and they decide to put sanctions on one country, it becomes agreed upon at the world level. And then they go to SWIFT and say, hey, you know what? We need you to shut down the rails from this country because we've deemed this country to have terrorist ties or whatever, and they're supporting terrorism. Therefore, we want you to shut down the bank rails so they can no longer transact with other banks, and we will then penalize our banks if they then deal with you. So that's SWIFT. Now, do you think that just because they removed that from US dollar reserve currency status, that the Bank of International Settlements, the IMF, and the World Bank won't do the exact same thing with external influence from a body like China with the digital yuan that might dictate on a much bigger level? I mean, then it becomes very centric. It becomes very centralized. So I'm looking at this, I'm looking at the BIS and the World Bank and the IMF. I'm like, they're helping countries test, but at the end of the day, they're 10 years behind the scenes. So at some point, and this is when we're going to get into this other article, that citizens of Europe do not want to see an EU-controlled digital euro. They want to see a sovereign digital currency for their country specific, because they also see the writing on the wall. And we're going to look at this. But let me open this because I think this feeds into the entire narrative, because we're looking at Ripple. We're looking at RippleNet. We're looking at the XRP ledger. Now, interoperability between CBDCs is pointless, because who are you giving the control to? Which country? And again, are you turning your country's sovereignty over to BIS as it has been turned over to SWIFT? But it really hasn't been turned over to SWIFT, because it's the world governments that come together and come up with a certain agreement. Whereas in this case, the IMF works independent. It's a NGO. So it becomes very difficult to fathom. But the one thing that we've seen time and time again coming from Ripple, whether it's David Schwartz or Brad Garlinghouse, and a couple of days ago, Chip and I talked about this, that Ripple has been posting tweets about articles they wrote months ago, and they posted multiple tweets about CBDCs, again, central bank digital currencies, as they did NFTs, to say, why not use XRP Ledger for NFTs? Why not use RippleNet and the ODL as a rail, as a bridge asset for the interoperability between central bank digital currencies? Because they, like us, understand that central bank digital currencies are inevitable at this point. Now, El Salvador is adopting digital assets. They're adopting Bitcoin and other cryptocurrencies as currency. Other countries around the world are doing the same thing. Venezuela doing the same thing. There's countries around the world that have identified that they need to be part of this crypto revolution, because they want to be on the forefront of this economic tidal wave. Whereas the bigger countries, the more developed nations, move slowly because they feel and believe that they're in complete control. They think they're controlling the narrative, where in fact, the entire narrative is being shifted over to the digital asset space. And these little countries are flocking to it. But the thing is that India is passing legislation as well on how to handle cryptocurrency, whereas a couple years ago, they said we're in favor. Then they said we're against. Then they said we're okay with it. And then they said we're against. They let the exchanges open. Then they shut them down. Then they could open. Then they shut them down. And now India is discussing cryptocurrency legislation. So all of this stuff is relevant. All of this stuff is happening simultaneously. And so we're seeing what the Bank of International Settlements, the IMF, and the World Bank are trying to gain more influence. So through their innovation hub, the BIS Innovation Hub, they said, we're going to test the interoperability or the settlement, the remittent cross-border payment settlement between Australia, Malaysia, Singapore, and South Africa. Hey, that's awesome. You want to test it? That's great. Go ahead and test it. But at the end of the day, it's an incubator. So they have something called Project Dunbar. We'll develop prototypes for shared platforms that will enable international settlement with digital currency issued by multiple central banks. But then the question is, what's the difference between the central bank digital currency and fiat? They're digitizing fiat. That central bank digital currency doesn't have a limited supply. It can be overprocessed. They can make trillions of them. They could keep printing their digital currency into non-existence, just like fiat currency. But what they're going to realize is as they start testing, hey, that's great, you had a successful test. But the overall scalability of their product doesn't exist. So you look back towards RippleNet or you look towards R3 in specific RippleNet, but they've spent 10 years building out the rails, testing the rails to scale, to make sure that not only can you create instant settlement between any asset, doesn't matter if it's a CBDC or a fiat or a crypto, but you can do it instantly, instant settlement in a few seconds for pennies on the dollar. Now, the BIS is trying to influence as others are trying to influence. And I look at this Project Dunbar's like, hey, this is great. You want to test it. You want to have a shared platform for cross-border transactions. Hey, that's awesome. Go ahead and test it. What's the scalability? You've tested between 4. Who's going to control them with hundreds of countries, right? It's not possible. But here they have Project Dunbar's work will explore the international dimension of CBDC design and support the efforts of the G20 roadmap for enhancing cross-border payment. Hey, that's great. You want to enhance cross-border payments? That's awesome. But you know what? There's a solution that already exists, and they're doing it a heck of a lot better than these guys are doing it. And it makes sense. So the article goes on and on and on, right? And this is just a test bed. It's not even the right thing. You know, it's amazing. But all this stuff is hitting like real time right now. So let me go back through here. Let me go back. There was some stuff. Let's see here. Who just bounced in here? G7 and G20 already signed off. That's right. I like this. Hands loaded. CBDC to XRP to CBDC. There you go. It's an easy technology. Jim D is saying governments will blow up digital currency by simply increasing max coin limits as they see fit. Fiat is an STD. So is an STD. So there's no difference. It's the exact same thing. And that's what we've seen. China, the World Bank, the BIS, the IMF, all operating together, right? So Baby XRP says XRP is the only thing that makes sense to interoperability. The BIS and their BIS Dunbar program doesn't make sense, not just to interoperability, but again, to scalability. And yes, Stellar, XLM will be a powerhouse as well because they're developing in the space. And it's amazing to me. It really is. You know, as we look at this, as we look at the changes and the direction that we're moving in, right? Crypto Kahuna says interoperability between the different currencies, which means the dollar will no longer be the dominant currency. No more sanctions to monopolize. Now, the thing is, I'm not against sanctions. You know, I'm in favor of sanctions. I think there are certain countries that operate outside of the law and outside of the agreed upon normalcy that do require to be sanctioned in order to keep them in check. However, the problem with sanctions, so there's good and bad. The problem is that those in government always seem to be okay. It's the people that always suffer. So no matter what country you have sanctions on, whether it's Cuba, Iran, North Korea, or others, the government echelon always seem to be okay. They always seem to be living on, living the good life. But then it's the people that suffer. That's the downside of sanctions, and that's where we don't like sanctions. There has to be another way. There has to be another mechanism. Now, and so it's crazy. It's good and bad. And so I see all sides of it, Let's see here. All right. So let's go. Miguel Castillo is saying it's all a show. It's all been already decided. XRP and XLM will be the new financial systems of the world. I think there's a lot going on in the world, and we'll see exactly how that goes. Can anyone explain Mr. Deaton's role in the Ripple case? He's trying to intervene in the case on behalf of the XRP community. So there's like 18,000 people that are signed up to his lawsuit against the SEC, basically stating that the SEC action against Ripple has been detrimental and has impacted those in the XRP community, and that in fact the SEC is incorrect and has made multiple misstatements about XRP, that it has no utility, where in fact it has utility, and there are other companies building on the XRP ledger that are utilizing the technology outside of and beyond Ripple. And if you look at James Rule XRP, he is a perfect example of the fact that XRP has the same utility as every other digital asset, but the XRP ledger is probably one of the more advanced technologies out there. And so that's really the the end all be all purpose, that motion for intervening. And it's huge. It's huge. Everything that they're doing in that direction, big, So XRP Speedboat Jeff and XRP, they're magic. XRP, not 100% sure, but I think it is magic. Yep. So all sorts of great stuff. All sorts of great stuff, right? So, all right, let's move on to this other article, because there's actually two articles I found. I'm sure they're both related. One is in Euronews.next. And this one, you guys got to see this, because this is relevant to the digital asset space, right? So here, look at this. Look how great this is. Majority of Europeans want their countries to regulate crypto, not the EU. How many people are on here from Europe? Would you want the EU to dictate the clarity or the policy on cryptocurrency, on how you can or buy not, or how you can or cannot buy or sell? Or do you want your own country to make those decisions? What's good for one isn't necessarily good for the other, even though I think it's good for all. Create some clarity here. It's a currency, but Europeans as at large, according to this poll, are saying the heck with the EU. The heck with the EU, because the EU doesn't speak for every individual country. This is the downfall of the EU. The EU has been detrimental to the cultural significance of every country. The EU does not represent Spain. It does not represent Germany. It does not represent the UK. Your own cultural significance in the overall. The EU has created a generalization that started for finance, but tries to create a generalization of the entire European region as one, where you have cultural significance in every country. You need sovereignty. Every country is different. The EU had detrimental impact on certain countries. Look at Greece. Greece was difficult to begin with, but Greece suffered significantly after the EU formation and the reliance on the euro and the rise of prices. And you go country to country, and it's had definite detrimental impact. Right? Yes, that's true. The UK is not Europe. I get it. It's not Europe. However, they did leave the EU. If you remember, the UK was, part of the EU, right? So as I'm referencing, as part of the EU, right? They left. The UK also made one important significance, where they did not accept the euro, except in Ireland. But you go to Scotland or England, and they're using their own currencies. They did not accept the euro as a national currency. But as you look around, it becomes very significant with the scale of this. Now, this poll was between August 4th and August 10th. Opinions of 31,000 respondents from 12 EU member states. Look at this. Now, Estonia has been on the forefront of cryptocurrency. It's amazing. Estonia is another one of those countries that's trying to take a leadership role in the direction everything is moving in. But Estonia, France, Germany, Greece, Hungary, Italy, Latvia, Lithuania, the Netherlands, Poland, Portugal, and Spain. It's amazing. The EU will make Bitcoin traceable and ban anonymous crypto wallets in the AML drive, and anti-money laundering drive. Maybe, Bitcoin's already relatively traceable. You can track it. But man, there's a lot going on. James Rule with a big 1111. Appreciate that. Lucky XRP tip right out of my Uphold XRP wallet. Take that, SEC, because that's real utility. That's real life utility of the XRP digital asset. There you go. So check this out. Shifting away from cash, the results come as the European Commission begins considering new legislation in September to create a new EU-wide regulatory framework for crypto assets. It also has seen a significant shift away from cash to digital. Okay, whatever, the ECB. But trying to zoom in. Look at the respondents. The EU and its central bank intervenes too much. 27%, 23%, 34% in Germany. Surprised Estonia isn't higher than 27%. Greece, 61%. Hungary, 25%. Italy, 27%. Latvia, 31%. Lithuania, 19%. And Netherlands, 25%. And there's others. But the European Union intervenes too little in blue. I don't see a lot of excitement over there, except for Hungary and Italy. I don't know what they're thinking, even the Netherlands. Come on. Why is this even in the Netherlands? What's going on over there? What's gray? There is no gray. Oh, don't know. They don't know. How can you have so many people that don't know? I don't know. I don't know. So you're asking the question, does the EU or the central bank intervene too much? I don't know. I don't care. 23% in Estonia, 34% in France, but it's amazing. 28% in Latvia. That's a big number. Greece, 10%. They're like, we know, and you guys intervene way too much. We don't like it. We want you to get the heck out. Latvia, 31%. All about crypto, So, man, it's interesting. Look at the key findings, though. A significant portion of citizens in Greece, Germany, and Latvia believe the EU and the ECB intervene too much in their country's economy. So, good stuff. It's where do you think the financial regulations should be determined? This gets into all the financial stuff. To what extent do you oppose your country creating its own national currency? This is interesting. They want their own country. Let's see. Support to oppose your country creating its own national currency in order to assert monetary independence from the EU. Would you support or oppose? All right. Strongly support. Estonia, 8%. Oh, no. Strongly support. Support, 31%. So 39% support. That's big. France. Look at that. Look at those numbers. These are pretty big numbers. 30 in Germany. Right? Man, big numbers here. Netherlands, not so much. What's going on? Where's Ferdy? Is Ferdy on here? Who's in here from the Netherlands? What's up with the Netherlands over here with 18%? The Netherlands, they're just, man, I don't get it. I don't understand. Strongly opposed. The Netherlands are happy. Everybody's happy in the Netherlands. Look at that, 27%. Everywhere else in the EU. So the Netherlands on their own, independent from everywhere else in the EU, with their satisfaction of their country creating a national currency to be more independent. Only the Netherlands. That's interesting to me. Limited knowledge of crypto. It's good stuff. So here's European citizens reject EU imposed crypto regulation. So it's basically, another take on on the same article. But I thought that was interesting. that's over in the EU, right? And there's the Netherlands. Why the Netherlands? I don't get it. So I don't. Baby XRP says, I know people in the Netherlands, they're treated pretty good in their country. Well, you go to Germany, they're treated pretty good too. But maybe the Netherlands is different, you know. So Paul Murray is a good point with Germany, because every trip I had to Germany, I would sit down with the business owners, and I was over in Berlin on one trip, and it was interesting because we got into it, and it was hearing from Germany, from their perspective, how they were upholding and supporting the economy of the EU. Germany, the majority of the economy supported by Germany. That was their perspective. So Germany controls it all, but that was a lot of their perspective. So let's see. All right, that's good stuff. All right, so I thought it was interesting. That was interesting stuff. 589 beer. 580. If you go, you know what's cool? You go over to Belgium, man, they get some good beer over there too. Good beer over in Belgium, especially in Brussels. Go to some good places. If there's anyone in here from Germany, from Dusseldorf area, good beers over there too. So, all right, then. Oh, you know what? I want to put this up. This one is exciting because, hang on. Let's go back. This is exciting because it's another crypto bank. Another crypto bank. Anthony says 7 countries pay for the entire EU. It's probably true, actually. James XRP is buying a brewery. Which brewery are you buying, James? Which one? So, all right, check this out. There's a bank called Vast. I like the name of it, Vast. The Vast Bank is the first nationally chartered U.S. bank that allows you to buy and sell and hold cryptocurrency assets directly with your bank account. How great is that? Get the benefits of crypto combined with the simplicity and security of a bank account. That's awesome. Put in your bank account, you're buying some digital asset. So the big one here, U.S. consumers can now buy and sell Cardano ADA directly from a bank account. I think it's pretty big. We looked at this the other day also, but look at the available coins: Bitcoin, Cardano, Filecoin, OXT, Bitcoin Cash, Ethereum, Litecoin, and Algorand. I'm looking at the choice, and I honestly, I don't get it. There's some other digital assets out there that might be a little bit better to have as a selection. Bitcoin Cash doesn't register on that top shelf list. Litecoin, maybe not. But I look at this and I'm like, there's some other assets out there. Maybe put XLM on there. Maybe XRP, I get it. You know, XRP, the whole SEC lawsuit thing, I get it. You know, maybe they're not ready yet. Maybe it's on the back burner someplace. But check out the CEO. We take pride in getting to know our customers, and that starts with listening. At the heart of many of these conversations is crypto. This is mainstream adoption. This is how the message is getting out there across the board. So for quite some time, our customers have been asking why they can't securely purchase the likes of Bitcoin using their bank account, citing concerns over trustworthiness, safety, and security of other platforms. They look at some of the issues. We were talking about BitConnect the other day, right? And BitConnect obviously went down the tubes a couple years ago. But that had a whole host of issues. But look, all issues which have kept many consumers parked on the side. There's trustworthy issues, but Coinbase, I know there's issues. Everybody has some issues. Uphold, Coinbase, all the different platforms. There might be a few issues over there, but there could also be an issue with a bank. You know, now this is a family-owned bank. I get it. They have everything that you need, right? They have everything you need in terms of, you know, insurance. It's FDIC up to $250K. So if you have money and that, now check this out. Check this out. right? This is huge. This is massive. And this is something that we've talked about from the beginning. We referenced, are banks going to start adopting digital assets and start buying up digital asset exchanges, or are digital asset exchanges going to become banks and start buying up banks? Now, Vast Bank is making this gray area. They're making this merger. They're stepping over the line a little bit, but check this out. This is something everybody asks right there, right here. Insurance. Vast Bank checking accounts are insured by FDIC for up to $250K. Their crypto accounts are protected through pooled insurance provided by Coinbase. So whether you're on Coinbase or on Vast, if you have digital assets, they're being insured by Coinbase. So whether that's good or bad, I don't know. But if you're holding fiat, hold your fiat currency, it's FDIC to $250K. If you're on Coinbase and you're holding fiat, they don't have it. Or Coinbase does, maybe. They don't have FDIC, but they're protecting through this pooled insurance, they're protecting your crypto assets. Now, no transfer delays. So you can move funds instantly between crypto and dollars. That's exciting. I mean, for anybody in the US that's saying, hey, is crypto gaining legitimacy at the banking level? There you go. Now, we saw that bank over in Wyoming also doing the same thing, but this is big. This one's in Oklahoma. Again, take a step back because this bank is family owned. I don't know if that's good or bad, but it is. That's just the reality of it, right? But look at this. We've launched crypto services for individuals as self-service capability. When customers fund a normal bank account, you have the ability to purchase 8 cryptocurrencies just by signing up for that account. Oops. Zoom back out. There we go. When you ask about custody and exchange, you can buy, you can sell, and you can store those 8 cryptocurrencies by opening a single bank account. So for people that want it, hey, that's awesome. That's great. Look at this. They work with SAP and Coinbase. So there you go. If you want to know who they work with, Coinbase. That's good news. That's exciting news. All right. We should be fired up about it. Fired up. What time is the SEC coming to see the Bitrue exchange? I want to know that too. You know, what's going on exactly? Because Coinbase is FDIC insured for $250K. There you go. There you go. So Coinbase, obviously listed on the NASDAQ. So, all right, let's keep going through here. Here we go. Oops. What is this? Anthony, that was a fact, not just talking BS. Only 7 countries are net contributors to the EU. The rest are beneficiaries, meaning they get back more than they pay in. I agree 100%, Anthony. There's no disagreement on my side. I agree 100%. XRP Supercar, shout out to you. Thank you very much for the support. That's awesome. Let's see. Baby XRP saying, I believe this case will break any day. Well, the next time they're going to be together is September 28th. So we have another month, and it's going to keep going and going and going and going and going. So that's it. Lots going on. Let's see here. All right. So yeah, this is great stuff. I didn't even realize what time it is, and just flies by. It's just crazy stuff. But check this out. We talked about Singapore before. I just want to throw this out here in case you guys haven't seen it yet. But, you know, Singapore is taking action against Binance. Now, check this out. Binance limits SGD product offerings in Singapore amid regulatory warnings. The Monetary Authority of Singapore placed Binance on its investor alert list on September 1 over concerns that the crypto exchange may have violated local payment regulation. So, stuff going on. Beginning September 9th, Singaporeans will no longer be able to trade crypto or receive payments denominated in the Singaporean dollar, better known as the SGD. So if you're in Singapore, beware, because there's some issues. Now, check this out. In Singapore, the Binance mobile app will also be removed from Singapore's Apple and Google Play Store. The exchange said all SGD trading pairs will be removed on September 9th at 4 UTC, with users advised to complete all peer-to-peer trades 24 hours before the deadline. So if you're in Singapore, get off their exchange, I guess. I guess that's it if you need to trade back into SGD. That's it. It's crazy, right? That's it. That is it with Singapore. What's up, James Rule? What is up? So, all right, let's take that down. Hang on a second. Got something else here. This one's gonna take a while. Let me just give a little. Let me just throw it up here just for the fun of it. Real quick. Bitcoin ban. These are the countries where crypto is restricted or illegal. Now, some of these countries you're going to say, yeah, I get it. Algeria, Bolivia, they're not all illegal. There's crackdowns, there's confusion. China. Cuba becomes the latest country to authorize and regulate crypto like Bitcoin. Colombia, Egypt, Indonesia, Iran. Now we see Iran's kind of uncertain where they're going with it. Nepal. It's illegal since 2017. North Macedonia. Russia. Now Russia also, there's some regulation that's going into place in Russia right now. We talked about that. Turkey and Vietnam. The State Bank of Vietnam has declared that issuance, supply, and use of Bitcoin and other cryptos illegal as a means of payment. Look at these fines. Look at this punishment over in Vietnam. I thought that was interesting. Hey, you guys are amazing. If you're brand new to the channel over here, make sure you give a shout out. Make sure you hit the subscribe button, hit the bell notifier, hit the thumbs up. Those three things in tandem help the channel. It helps the algorithm. Google is looking and they're looking at the channel. You guys come in here, you're like, the On the Chain is amazing. The On the Chain community is by far the smartest community of any crypto channel. I've been to a bunch of them. You guys are amazing as a group. The On the Chain community, the On the Chain family, by far the smartest, most engaged, and the greatest commentary. But if you hit subscribe, you've never been here before. If you've already subscribed, hit the bell notification. Helps you get notified. Helps the channel, actually. And you guys know we do stream 6 days a week. We stream Sunday. Oh, today's Sunday. Sunday through Thursday at 8 p.m. Eastern Standard Time, and every Saturday morning at 8 a.m. Eastern Standard Time. I hope Chip will be back on tomorrow night. I hope he's feeling better. If not, we might have a little bit of a hiatus tomorrow night. Maybe he'll be back Tuesday. I'll be back Wednesday night. I got to take tomorrow and Tuesday night off. But then I'll check you guys back out Wednesday. We'll tune in tomorrow. Hopefully Chip will be here in my place. And then we'll be back Wednesday co-hosting. Until then, look forward to seeing all you guys. And we'll see you guys on the next one. I'm out.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.